Welcome back, guys. Today, I'm going to talk about MGM Resorts stock and why it had such a dramatic move to the upside. So, let's get started. So, as y'all can see, MGM was up around 14% on the day and was initially up well over 20% pre-market and in the morning. So, what caused the move of MGM Resorts to such high levels? The only reason why MGM moved so high today was due to the fact that IAC opened a stake in MGM, which was worth $1 billion, which is around 10% of all of MGM shares. As you can see, MGM has been really beat down due to the coronavirus, and from peak to trough, it was down around 72 to 75%, which is pretty bad, but it has recovered swiftly from around $7 at the lows to $21, giving a return of 300%. As you can see, it did hit around the relatively new highs on the 3-month chart, but it then quickly dipped down below 20% and is now sitting at 13.77%. Let's discuss what this means for MGM and what this means for IAC. So, to better understand the deal between both sides, we have to truly understand what Interactive Active Corp does and how it affects both stocks. So, Interactive Corp is an internet and media company with over 150 brands and products. Essentially, what they do is they acquire businesses such as Match Group or Tinder that they did in the past, and they help these companies grow and they sell it later for a higher profit, or they publicly list it themselves. One example can be Match Group, where they acquired Match Group, which was a publicly listed company. They made it better, they understood the fundamentals of the company and resold it, which was quite interesting for an internet company to do. So that's the entire business models: acquire companies and sell it or publicly list it for IAC. So one thing that's really interesting is that they took a stake in MGM, which has nothing to do with internet or media. And secondly, they didn't buy the company straight out. They just bought a 12% stake worth $1 billion. $1 billion is a lot for MGM, as it represents over 10% of all shares inside MGM Resorts International. So now let's discuss the implications of the share price on both MGM and IAC and what this means for other stocks like Wynn Resorts or Hyatt or Hilton. For MGM Resorts and other stocks similar to MGM, it is very vital that hedge funds or other companies invest in their sector, as they can bounce back to their $30 to $40 highs once MGM was at. So how did other stocks perform in the similar sector? Well, not surprisingly, stocks like Caesar Entertainment was up 3.5% today. Wynn was up around 10% today. And all the airlines and cruise lines and other travel related stocks were up a lot today. Why people may say that the market was up today was actually not the case. S&P was hardly up. It was up only 0.3%. The Nasdaq was down. The Dow was up, and IWM or the Russell was not up that much either. So I think the IAC investment itself was pretty intriguing for the entire industry. Now let's talk about IAC and what the stock price did. So actually IAC was down 1.34% today. They reported pretty bad earnings after hours, as you can see. They expected a profit of $2.12, but actually got an EPS of negative 1.13, which is its own issue. But as you can see, the stock had been doing pretty well. And the reason why there's a big drop is because, again, it was because of Match. Match made up around half of its market cap. So once they sold it or once they publicly listed it and became its own company, but it came under IAC, which is still very, very interesting on how they do business and stuff like that. In terms of generally, the person acquiring the company is not as much benefited as the company being acquired, as premiums for large positions or acquisitions tend to be 20% plus. Example of that can be Tiffany and Company, which got acquired for around 25% premium recently. So yeah, that's pretty interesting. Now let's talk about if I want to buy any of these two stocks. Personally, I would not touch both of these stocks, but if I were to choose one, it would have to be MGM. I would not touch MGM even though it's down more than uh, more than 30% from its highs, because I still believe coronavirus will linger along. I believe MGM is not in a great position to come out of this victorious and to all-time highs. I believe that resorts will be one of the last stock sectors to recover, especially casinos. And I think it's jumped too much. If you had bought in below 10, below 8, yeah, that would have been a great gamble. You could have bought 100 or 200 shares. Would have been a decent investment. But now at 21, it does not make sense. And for IAC, it's just too overvalued for an investment company. For an investment company to be valued at 120 PE ratio and a market cap of 11 billion, so you essentially spent 10% cash, 10% of your market cap in acquiring 12% of another company. I really don't like IAC. I have been looking at the stock over the past couple of years. I really don't understand their business model as much as I do other companies. And I have this philosophy that if you don't understand how a business works or how a stock works, you should tend to not invest in that company. So there you have it, folks. I would not buy either of the stocks, but if I had to choose one, MGM would be my choice between the two. Thank you guys for watching and have a great day.